Hello YouTube family, welcome to another video. So in today's video, I want to talk briefly about bonds and specifically more about the Mayberry bond IPO, and also I'm going to talk about the Regency allotment of shares, recent IPO that I covered on my channel. So I want to share my screen. So a bond really is a fixed income instrument. Before I get into the prospectus, a bond really is a fixed income instrument that represents a loan from an investor to a borrower. Typically, corporate companies or government. So they will issue out a bond, and they have various covenants to this bond and agreements, and then you do this through a broker normally. And basically you will lend your money to the government to fund whatever project or or any other reason they might have for this bond. So the Mayberry IPO now, the prospectus dated November. Let me zoom in this. So this prospectus was released on November 24. It opened Friday, December 2nd, by the way. So those who don't know Mayberry Investment, Mayberry is a investment company, asset management company. They also they have Cambia operations, and they are in the investment business mainly, but they also in the business of Cambia, the Cambia business. And this company is really located, operates mainly in Jamaica. So this bond that Mayberry is issuing, they have 4 tranches. So you have tranche 1, which is $1.25 billion. And this tranche, the tenure is 13 months. And the interest rate for tranche 1 is 9.25%. Tranche 2 now, which is the tenure is really the time you will owe the bond for, 18 months. Same amount, but interest rate is higher. It's a longer time period, 10%. Tranche 3, which is 24 months, it's 11%. And tranche 4 is 36 months, it's 12%. So we can see where the longer you maybe all your money holds your money for, they will give you a higher interest rate. And in this time when the stock market is in a I wouldn't say exactly in a bear market yet, but stock market is in a downtrend since year to date. And for some persons who prefer fixed income, who want a steady income, bonds could be a good idea for them. So the invitation relates, reading from the prospectus. This invitation relates to the offer by Mayberry Investment Limited for subscription of secured bonds having an aggregate principal amount of up to $5 billion with an option to upsize to $7 billion. So if Mayberry receive more money than they settled for, they can also upsize this IPO. But I'm gonna go to this summary. This won't be a long video. I'm just going to the summary. So Mayberry is incorporated in Jamaica under the laws of Jamaica, and it's a secure bond with 4 tranches. And I already discussed about the various tranches. The minimum subscription amount is $20,000, and if you want to further increase this amount, you can't do it with no less than $10,000 for every with further increments. So if you want to increase up more than $20,000, it have to be in increments of $10,000. Interest will be calculated and accrued from day to day, after as well as before any judgment, but prorated on the basis of a 360-day year and paid quarterly on each interest payment date. The first interest payment date will be March 30, 2023. So Mayberry will pay these interests quarterly. So that 9% that I described in tranche 1, it will be divided and paid quarterly. So every quarter you'll receive your interest payment. One thing about most bonds normally have what they call principal and interest. So the principal is the initial money that you give to the company, and you will receive back this money at the end of maturity, while you'll receive your regular interest payment maturity date. So I'll describe that you have 4 tranches: 13 months, 18 months, 24 months, and 36 months. So those are the 4 maturity date for this bond. So the covenant for this bond, which some bonds have specific covenants, the secure bond benefit from 2 financial covenants. In brief, the financial covenants require the company to maintain a maximum leverage ratio of 4 times and a minimum current ratio of 1.20. So those are the covenants that this company should abide by. The company use of proceeds. The company intends to use the proceeds to expand its portfolio of securities, loan, and general corporate purposes. So I watched an interview with the CEO, and he was saying that he wanted to increase their margins. They lend out money to customers, and they normally put up the person's investment account as a form of collateral. So, and they basically want to use it to expand and get more business. So that's what basically I get from what he was saying. And he was talking about margins. So I guess they want to really lend out the money mainly. They want to lend out this money, and they say they are able to benefit from higher interest rate that they will receive from their customers. Interest payments, let's talk about tax. Interest payments to Jamaican resident bondholders will be subject to tax at 25%. Such interest will be withheld by the registrar and paying agent and paid to the relevant tax authorities. A certificate in the usual form confirming payment of such tax will be issued to the relevant bondholder by the registrar and paying agent. So your bonds will get taxed, your payments will get taxed, your interest. So that's one of the downside it can be to bonds. But so key dates. The bond, let me look. Key dates that I haven't mentioned yet. So the opening date is December 2nd. It has already opened. I think December 2nd was Friday, last Friday. It will be closed on January 6th. So you have quite some time to get into this bond if you're interested. And yeah, you can check out your broker. The way you could get into this bond is through Mayberry. I saw on a post where it said you have SSL Securities and various other brand brokers, but you can check out them on their social media page and they will tell you where. I think you have up to 4 brokers who are issuing the bonds, or secondary agents, I should say. So that should be it for the Mayberry bond IPO. So in a summary, that's what really a bond is. It's really a loan to share. You're really a loan, and normally to corporate companies and government, and you have two types. You have unsecured bonds and you have secure bonds. You have a lot of variations now in terms of how bonds can be paid out and various features of bonds, but the basic is that a bond will have principal, and you get back your principal at the maturity, and then normally you have interest. So that's like a standard bond, but you have a lot of different variations. So regarding the Regency IPO now, I was looking at this, and basically, let me zoom this in. Key strategic partners pool. So the key strategic partner pool got their 100% allocations, and associate loan conversion got their 100% allocation, and Grace Kennedy Investment also. The general public will receive, for persons who applied in the general public, they will receive the first 10,000 shares and approximately 5.3% pro rata after pro rata allocation thereafter. So if you applied for in the general public pool, you will only receive the first 10,000 shares, and the shares were at $1 per. The company was at $1 per share, and you'll get only 5%, 5.3% pro rata allocation thereafter. So this is really a small amount, but it's better than the last two IPOs. But that's basically it for this allotment. So that's what I really will cover in this video. Any topic you want me to discuss, you can leave it in the comment section. Please subscribe, and like this video. Stay tuned and look out for my investment crash course, which is coming up this week, Wednesday.